So really what I want to start with is, I don't know if anyone was paying attention this week, but oil prices did something absolutely remarkable on Monday. Oil prices went negative for the first time ever. So this was a historic moment when oil prices went negative, and it got all kinds of press and lots of buzz. Everyone was talking about it. So really, before we talk about divestment, I think it is important to understand the context of the moment in history that we are in right now. So I'm going to take a few minutes to be able to explain just what the hell happened to oil prices this week. So to understand what happened, there are going to be a few steps. I'm going to do sort of an oversimplification right now, but forgive me, I'm going to wear my economist professor hat and just kind of teach you a little bit about oil markets. So basically what happened is that a lot of retail investors started buying this one specific ETF, USO. USO is the United States Oil Fund. And you can see here, this is a chart that I took. This is from an app called Robinhood. Robinhood is a free trading app in the US. So this is like an American version of Questrade or Qtrade or, Wealthsimple Invest, like where you can buy and sell your own investments. So a lot of traders use it in the US, but these are not sophisticated traders. These are retail traders, people doing it on their own. And they bought this specific ETF called USO, the United States Oil Fund. You can see here they really didn't, this is the number of users holding it, and really no one owned it until, what's this, like March 9th? And then from March 9th until April, and then you can see it just jumped up to over 140 users buying this ETF. And I don't think they really knew what they were buying. And obviously these people lost a lot of money. You can see it doesn't really matter when you bought it, right? But certainly at the end here, the price cratered. And the reason for that is people didn't know what they were buying. So I'm going to show you what they were buying. They're buying this United States Oil Fund. I kind of get a kick out of the USCF. This is the investment company that makes this ETF. And in fact, this is not actually an ETF. It's not an exchange-traded fund. This is an ETP, an exchange-traded product, because it's not so much a fund the way a lot of the normal ETFs are. It's kind of ironic to me that they say invest in what's real. And they're like, yeah, because they're all about commodities. When in fact, I don't think people realize how real of a thing they were buying. So what this fund does is they invest in something called crude oil futures contracts. So a futures contract, it's really important to understand what this is, what this means. A futures contract is a contract to buy, in this case, a barrel of oil on a specific date in the future. So you're not doing it right now, you're not buying a barrel of oil now, you're buying a barrel of oil in the future. And you can do it, they typically do it by month, okay? So you're gonna have, over the next little while. Now, the problem is that most people don't know what the heck a futures contract is. And what they didn't realize is that oil contracts, the way this ETF works, and I'm just gonna call it an ETF for simplicity's sake, but the way it works is that they would own a huge amount of the next month's contract. So if we look at, this is going to be the NYMEX, which is the New York Mercantile Exchange. This is where commodities are traded. And these are crude oil futures. So if I look at the quotes right now, you can see that we can see the futures market to buy a barrel of oil on June 1st or July 1st or August 1st. You can see the price has since sort of rebounded. It's not negative anymore. This was very much a blip in the market. But, I could very easily have a contract and I could buy, for $16.50, I could buy a barrel of oil on June 1st. Now you'll notice that today's date is April 23rd, but we don't have May futures anymore. What I would have to do is I would have to go back in time. I believe it was here. Settlements, my bad, and I can go back a couple of days. And if I go back just a couple of days to April 21st, you can see here May 20 futures. So basically the way this works is that if you buy a futures contract in April, there's something called a settlement date. And on that settlement date, this is going to be about a week before, the end of the month. If you own the contract on that settlement date, you then physically have to take a barrel of oil from a seller in Cushing, Oklahoma. It's like the end of the pipeline, and you are responsible for a physical barrel of oil. Well, what happened is on the 20th, all of these May 20 contracts owned by USO, this United States Oil Fund, were set to expire. Now, the U.S. Oil Fund, they're not going to take possession of the barrels of oil. They're not set up for that. They are a financial company. They want to deal in these paper products. But they had to sell these contracts because they didn't want to take control of them. And the algorithm said very clearly on April 20th, we're going to sell all of our May 2020 futures contracts, and we're going to roll them over into June 20 contracts. Now, throughout history, throughout the last however many years and decades that there have been these future contracts, this has never been a problem. There's always been someone willing to buy those contracts from you. On April 20th of this year, nobody was willing to buy them. And there are a few reasons for this, the main one being that there's no more storage. There's no storage, there's no tanks, there's this glut of oil, there's all this oil, lots of supply, no demand. And so because this fund, U.S. Oil Fund, had to sell these contracts and there were no buyers, the price went negative. And you can see that at the lowest point that people were paying $40.32 to sell these contracts, which meant that other investors were able to buy oil and get paid, receive money by buying these contracts. You can see that on the 21st, it also was negative for part of the day, but it actually did end up, this is the last price would be at the last day on the 20th, the market did regulate itself, and it got back to positive, but for a very, very brief moment in time, the price of oil went negative. And this was a historic marker. Now, in the grand scheme of things, so what? So what? Does this matter? Not really. It doesn't really matter. The price went negative. It was a blip. It's gone back up. If I look at it as of today, you can see here that the last price, here it is, about $17 a barrel. Not the end of the world, not the implosion that we saw. But I think this had a huge, profound impact on the psychology. That when people saw these headlines of oil going negative for the first time, I think that was yet a further signal to investors that you need to be cautious with this oil market, that things are not working right, that this imbalance between supply and demand, there's way more supply than there is demand, that this was a giant, giant, giant red flag for investors in the fossil fuel sector. So really the lesson learned, what I want you to take away from this is don't invest in things you don't understand. That really that's the lesson here. That if we look at USO, I'm going to look at USO here and bring up the chart, right? And I'm just going to show it to you over the last little bit. People didn't know what they were buying, right? And so if we look at it over the last year, right, the price here about $12, okay, whatever, $12. And then now obviously the price of oil started to go down. It went down a lot. It looks like it was right around March, end of March, beginning of April. This is when I think investors started to get a little optimistic. They were like, ooh, I'm going to buy this fund. I'm going to buy this, not knowing what it is. Paid upwards of $6, and it then just absolutely collapsed. Where, I think a lot of people, the psychology was like, well, the price of oil can't fall anymore. And it's like, well, they got proven wrong. That for the first time ever, the price of oil went negative. And I think for the biggest factor in this was that a lot of these retail investors had no idea what they were doing. They bought this ETP, exchange traded product, thinking it was an ETF, thinking that it was like, okay, it's just going to track the price of oil, not realizing that they were actually buying these futures contracts, and that they ended up losing a lot of money doing this. So that's what happened in the oil market today. It was fascinating for me to watch it, or I guess not today, this week. It was fascinating to watch it. It was really a historic moment. There are all these memes going around, and really, I think it is something that did break through, and I think it's a moment in time that we're going to remember, when oil prices went negative for the first time, because I do think they might go negative again. So, any questions about that? I'm happy to move on. I've sort of got my divestment 101 ready to go, but I do just want to take a little quick moment. If you have any questions about what I just wrote, I know it's a little bit of a weird, obscure lesson in future contracts and oil markets, but hopefully you found it as interesting as I did. Hopefully you learned a little bit about why oil prices went negative. And if you do have any questions, please put them in the chat window. I'll just give it a moment here, and then if there aren't any questions, I'll move on to the actual divestment side of things. All right. I do see the question, what's the risk this might happen in June? It might happen. Honestly, I don't know. My hope is that people have smartened up. I really, really hope that people have kind of figured out. So it was kind of interesting. We can track the June prices very, very easily. Oops, where'd it go? So I can look at this, and again, what we can see is look at the price for the June contracts. So I'm going to look at this last. That it was still trading at $21 a barrel, and then on the 21st it went down to $13 a barrel, and then on the 22nd it was back up to $21 a barrel, and then today the preliminary is at about $22 a barrel. So my hope is that the investors in USO now actually know what the heck they're buying, and so this won't happen again. But one thing that would be really interesting, I don't know if I'd be able to get this on the history, but looking at how much is actually invested in this fund, you can see about $3 billion invested in this, which is just ludicrous. Like, look at how much money these people have lost, and there's like $3 billion invested in this fund. And I'd be really curious to track this number over the last few days. My hope is that there would be less money in this than there was before. Also, I think that the ETF itself has wisened up a bit. That when we were looking at it before, they really had all these different, that most of the money was in the next month. And you can see here now, actually most of it is actually, it's not in June. Here's this plus this, so maybe about 820,000 or 820 million rather is invested there, but the majority is July 2020 and then August 2020. So basically, I think that the fund has wisened up. I think that investors have wisened up. I think it's very, very unlikely that this does happen again in June. Although what I will say is that basically, like, oil storage, is filling up. And if it gets full, before production gets cut, then, really, who knows what the heck is going to happen. So, I would be cautious with this. And again, I really don't want people to think that, it can't go any lower. Now's a good time to invest. No, it can definitely go lower. If we get all the storage absolutely full and the oil keeps flowing, then we're going to be right back in this scenario next month. Simon asks here, do I know of any major investors who've now taken the leap and invested in sustainable alternatives? So, organizations have been doing this. I will just say right now, I'll give a little shout out to Guelph. I think University did divest, I think. So, yeah, here it is. This just came up. So the University of Guelph today voted to divest from fossil fuels. This was yesterday. It looks like it was a little Earth Day decision. Good for the University of Guelph. But yeah, they might have been a little bit too late. Like, really, I bet they're really wishing that they had made this decision 3 months ago. before fossil fuels absolutely cratered. So will be interesting to see any of these universities and organizations where we've been pushing for this, for divestment. We're now going to be able to go and actually calculate how much money they've lost from this.